2022 been a year of turmoil. 2023 is looking to be a continuation, although perhaps hopefully a little less crazy. So where do you see gold moving to this year? What would you say would be the key catalyst to the gold price on the immediate horizon, whether that's in US or in multi-currency? And does the threat of a recession, or even worse, still remain? And if it doesn't, what would be the outcome of a soft landing if that were to eventuate, even though it isn't particularly likely?
Well, I think that I once said in an interview that the market really believes this hawkish narrative that Jay Powell basically developed over the last couple of months, and he might be nominated for the Oscars, for the Academy Awards, because everybody thinks that he's now really the new Paul Volcker. I tend to disagree, and I think the market at the moment isn't really buying what the Fed is selling, and if we have a look at market developments, it's pretty interesting that the market simultaneously believes in several different outcomes, and from my point of view, something's got to give. So actually, people believe that the Fed funds rate will peak below 5% at some point, and that then we will see rates being lowered again. The market believes in a shallow recession or a soft landing. The market believes in a somewhat rapid decline in inflation this year and also next year. And it believes in strong earnings growth and very stable margins. So something's got to give. And if we have a look, for example, at S&P earnings, they're expected to grow 9% in 2023. So that would basically suggest that a recession will be avoided. On the other hand, Fed funds futures are seeing a pricing in nearly 200 basis points of rate cuts until December 2024. And that would, I think, lowering rates by that magnitude would imply a recession, a major recession. So something doesn't really add up. From my point of view, Michael, I see that actually disinflationary forces are quite strong. We're seeing that the calculation of inflation numbers is being changed. So this will have an effect. Then we have, of course, the base effect. Then we're seeing that commodity prices, especially energy prices, have come down dramatically. So I actually expect inflation numbers in the United States to trend to 3.5% within the next couple of months. So what does that mean? That will reduce the pressure that central bankers have enormously. So then they will say, well, actually, we did it. We broke inflation, and it's now time to talk more about, the recession threats. Just have a look at the ISM, for example. Yeah, it's clearly indicating a recession. So I think this will be the playbook for the next couple of months. Dramatically falling inflation rates, and then central bankers becoming definitely less hawkish. And I think that the gold price is already kind of sniffing this pivot that we're seeing. Now, when it comes to gold, I think it's pretty interesting that there's so many drivers now. First of all, from a macro point of view, clearly this pivot that we're seeing. Then we shouldn't forget what's going on in China. I had a look at the numbers, and actually, the lockdown in China was a little bit more strict that we know it from over here in Europe, for example. And Chinese basically weren't really able to consume within the last 3 years. Now we saw this kind of pent-up demand and this catch-up consumption needs over here, and we saw that it has a dramatic impact on inflation and also on economic growth. And if we have a look at China, the savings before COVID appeared were, I think, 8 trillion renminbi. Now it's 15 trillion renminbi. So it almost doubled. So I think there will be an enormous amount of pent up demand and consumption unleashed over the next couple of month, and this will definitely kind of counteract to those recessionary forces. And when it comes to gold, I think it's pretty interesting. I think that this will be a very important driver. We are seeing that that demand from China and also from India, but Asia in general has picked up significantly, and we also saw that central banks are now really a major driver. Central banks have bought more gold than I think the last time in 1967. And it was Uzbekistan, it was Turkey, it was Qatar. And then there's one major unknown buyer who didn't want to disclose who it was. I think we all kind of know who it might be.
China.
But it, but I think that, you know, this is clearly showing this loss of trust that we saw over the last couple of months. I think that many countries actually study the sanctions playbook that the Western world is now using against Russia, and therefore they need something that is highly liquid, that is accepted all over the globe, and that doesn't have any counterparty risk. So I think this will continue to be a major driver.
Ghana this week, I believe, just swapped gold for oil. Yep. And it was only $40 million in value, but it was a straight swap. So if that's not an indicator of what's coming down the pipeline, I'm not quite sure what else could be.
This example that you brought is clearly showing this loss of trust in the US dollar and also into international agreements, organizations, and so on. And clearly, this trend of de-dollarization that we describe in the Gold We Trust report for many years now is picking up momentum. And I think that the linchpin of this development of de-dollarization is the important and dramatically changing relationship between commodities, gold, and the US dollar. And I think this is not, this is not one point in time. This is a process. This process has been building up for many years. But if we have a look at, the BRICS, but also the SCO, those organizations are becoming much more important. They're becoming bigger. And I think their self-confidence is clearly rising. Therefore, I would say that we should, and this is something that we will also focus on in the upcoming Gold We Trust report that we're already working on, obviously. Excellent. I think in the Western world, we should focus less perhaps on what's going on around here, and focus really more on the gold demand and the gold tradition in emerging markets, because I think it's really where the momentum is big. In the Western world, we have not seen the marginal buyer being the Western financial investor yet. I think it's picking up now. We're seeing that obviously I would say that those ETFs, for example, we also always show the correlation of ETF inflows and the price of gold, and it's a very pro-cyclical behavior. So every time the price of gold rises, we're seeing inflows into the ETFs and vice versa. So I mean, it's been a fantastic start into the new year. Gold is up 4.3% in US dollar terms since the beginning of the year. In euro terms, we're up 3%. It has already been a good start. And as I've said, I would expect the price of gold to make new all-time highs this year. We're not too far away from that, actually. We're now around this old all-time high at 1911. I think it's kind of playing around at this price level. I would see some perhaps taking a breather for the next couple of days, but I think that over the course of this year we will make new all-time highs in US dollar terms, because people tend to forget that gold has made all-time highs actually in almost every currency last year, but in the US dollar.
Ronnie, thank you very much. It's been a joy to talk to you again. I'm looking forward to this year's Gold We Trust report coming out in May. All things going well, I might actually come and see you this year for a change instead of being stuck down here in New Zealand. And I appreciate your time as usual. Thank you, and have a good morning.
Michael, thank you very much. Thanks for the invitation. Thanks for being a premium partner of the Gold We Trust report, and have a great start into the new year. And I look forward to finally meeting you in person soon.
Love it. Thank you.
Thank you. Bye-bye.
Bullion Depository provides safe, secure, discreet storage of precious metals for sensible investors around the world. If you would like more information on gold storage or New Zealand, please go to our website nzbd.com.